Hello and welcome to another edition of the Mouthy Money podcast. I am joined today by Polly Gilbert from a mortgage broker called Tembo. This is the second part of a two-part podcast series we're doing around mortgages, which forms a bigger sort of one aspect of a bigger thing we're doing at the moment, which is our mortgage takeover week. So we've covered Mouthy Money, the newsletter, the website, all of our questions from readers have all been about mortgages, basically everything and anything about mortgages. Now, the big thing we've really been focusing on through all this stuff we've been doing has been around what does the new normal for mortgages look like? Obviously, we've had big changes in the way mortgages function in the past couple of years, primarily down to the way because of interest rate changes that we've seen. And we've kind of looked at, where are things going and how things are changing? Now, Polly, before we kind of dig into the topic, do you want to just give us a bit of background about yourself and tell us about Tembo as well?
Absolutely. So my name's Polly. I'm one of the founding team here at Tembo. So we've been running for about 4 years now. My career really has been mostly in startups. I used to work in advertising back in the day. It's kind of where I cut my teeth. And then I founded my own startup, went to another startup in the founding team, and then joined at Tembo. So I've always been in kind of payments and fintech, really. And a little bit about Tembo. So we, as you quite rightly say, we're a digital mortgage broker. We've actually kind of broadened our proposition recently. So we're also a savings platform. We provide kind of lifetime ISA products. We're currently launching an ISA product, cash ISA. But really our kind of speciality and where we've built our brand and built our name is in mortgages. The product that we offer specifically is we have an affordability solution, essentially, that somebody can come to our website and in under 10 minutes, they can discover what we describe as their true affordability. And what that means is we do all of the things that you would expect a typical mortgage broker to do. So we're whole of market, we look at over 100 lenders. But on top of that, we've built in the criteria and the eligibility for a number of different kind of more specialist schemes. The reason that this is so important is because affordability has become a bigger and bigger thorn in our side as a nation. It used to be when we first founded that most of the customers we saw struggling with affordability were first-time buyers. As the interest rate market has changed, as we've seen inflationary pressures really have an impact on people's monthly repayments with their mortgages, the profile of people who are failing traditional affordability has really changed. We see a lot of people who are remortgaging. It might be their first remortgage after buying when interest rates were really low. Their circumstances have changed. They might be going through a divorce, whatever it is. And these additional schemes, these different schemes that can be used, are incredibly important in those environments. And actually, we're seeing a lot more innovation from lenders, from property developers, to try and help people, to help consumers, borrowers, people overcome these issues. It's just most people don't know about them because they're quite complicated. They can be quite niche, so they only work for a certain segment of borrowers. And really what our tech does is opens up all of those different schemes under one simple to use affordability tool. After that, we do everything else that you would expect from a broker with kind of having your own dedicated advisor, et cetera, et cetera. But I think that's where that's our special sauce, really, is this affordability solution and opening up all of those options.
So we're going to dig a bit more into that kind of affordability question in a bit, and I think we'll come to looking at kind of first time buyer issues as well, and kind of the lifetime ISA and things like that that Tembo obviously offers now. Zooming out a little bit though on it, and because I think I always find it interesting. And I can't remember the specific stat, but in the vast majority of people, when they go to buy a mortgage, or, get a mortgage in the UK, tend to use brokers, don't they? What is that kind of, what is that value, the value that a broker, I mean, obviously, the market, people see it because everybody's using them, but what are brokers bringing to the table really for a, typical mortgage buyer?
I think, the basic answer to that question really is there are over 100 different lenders in the UK. It is almost impossible for somebody to keep on top of how those rates are changing, who might be pulling a product, whether anyone's rates are going to be changing in the near future, etc. We know at the moment that mortgage deals are coming off the shelf faster than I think they have in the last 8 years, I believe is the stat. So there's this massive volatility in the market and there's a huge amount of change. And what a broker does is basically helps you to translate that. You don't have to be Martin Lewis to go out and get the best mortgage that you possibly can. You don't need to be staring at these rates every day because God knows most people don't have the time to do that. So a broker basically helps you work out in the current market, what is the best deal that you can get? And also, could that potentially be improved over time? So you can take out a mortgage up to 6 months before you actually need to move on to that deal. What we always say to all our customers, and what every good mortgage broker should be saying to their customer, is lock in a deal now and they'll keep kind of rate checking for you. So anytime you give them a nudge and say, oh, I've seen this in the news, can you see if there's a better rate available? They'll go away, check, is there? If there is, they'll apply for you. All of that kind of stress and headache is taken away from you as a consumer because it is incredibly stressful. Like there's such an emotional connection with your home. And also there's a very tangible, real connection with your monthly repayments, which for most people are the biggest outgoing they have every single month. So a broker will essentially help you understand and navigate the market and get the best deal you can. I think that is becoming more and more important as there are so many different schemes available. And I do always like to say that it is incredibly hard for people now. Either you're a first time buyer and you're facing the most difficult market in history to get on the property ladder, or you're a borrower and you're facing a big rise in your monthly repayments. Neither of those are particularly enjoyable situations. But the kind of flip side of that is that there is more innovation than there ever has been. We've seen huge amount of appetite from a lot of lenders, some big household names, a lot of smaller building societies, and kind of newer lenders, people like Gen H, who are really doing quite amazing things to switch things up. And that's when a broker's role, a good broker's role, is even more important, because not only are you contending with all of the high street lenders, etc., but you've also got all of these additional schemes that you could consider. So yeah, they're kind of like the expert in your pocket, I guess. You should be able to call them whenever and just get their take on, I've seen this new product in the news, do you think it could be a fit for me? They're your person to kind of hold your hand through that process.
I mean, it's interesting because I spent a lot of time talking about money and, financial services, as you might imagine, on this podcast. And it strikes me as one particular bit of the market of financial services that actually works quite well for consumers, particularly that point you made about you lock in a rate 6 months before, and then if you find a better deal after that point, particularly where we are now with kind of rates moving around all over the place and affordability kind of questions floating constantly, it works quite nicely, doesn't it? And that's to the advantage of the person who needs a mortgage. You're not bound to pick something 6 months ahead and then kind of you have to watch everything get easier, and you're stuck with whatever it is you picked, kind of thing. So that's quite, I like that. That strikes me as good market, basically. On that affordability thing is interesting though, and because interest rates have come up so much in the past couple of years, it's really changed the kind of the affordability puzzle. I mean, kind of to give you my personal kind of experience of it, is we got a mortgage in 2022. We got sub 3%. We were a first time buyer. We used a government 95% scheme and all this kind of stuff to probably buy something that was now probably would be beyond our reach.
Mm.
And there's a lot of people who, just in terms of timing, didn't get on the ladder at the right time. So, what do you guys do to help solve that affordability puzzle? And how do you unpick it for people who want to get on the housing ladder but might be, struggling about what to do?
Yeah, it's a great question, because I mean, we always say to people, there's an old adage, which I actually think is from the investment world, which is time in the market beats timing the market. And I believe that to be so true. But you look back sometimes and you think some people struck it lucky. I'm similar to you. I bought in 2021 when there was a stamp duty holiday, which was quite nice for me buying in London. And I got a 1.99% interest rate. I would not have been able to afford the monthly repayments on our house if we had bought 6 months ago, a year ago. So yeah, timing is really important. So in terms of how we unpick it, there are a few different things that you can look at when it comes to affordability. So obviously the kind of finger in the air that not everyone will have heard of. So you get so caught up in your own niche, don't you? Like everybody knows the mortgage affordability rules. The finger in the air that most people use is around 4.5 times your income is what most lenders would allow you to borrow. In the UK, the number that people actually need, the income multiple that people actually need, is between 9 and 10%. So there is this massive gulf between what lenders will allow you to borrow and what people actually need. And as you will know, you're talking about money every single day. That's primarily because house prices have risen pretty stratospherically and wages haven't quite done the same. Affordability solutions tend to come in a few different groups. So firstly, you've got ways that people can boost their affordability alone. So that would be without any external help. When I say alone, it might be you and a partner buying, but you're not enlisting somebody else's help as a guarantor, for example. There are quite a few mortgages where lenders will let you go to above that 4.5%. And often this is a really good place to start. It's typically based on your earnings, your employment, or your status as a buyer. So there's a great scheme called Helping Hands. This is for first-time buyers, and it allows people to borrow up to 5.5 times their income. So that extra borrowing makes a massive difference for a lot of people. There are some additional criteria, so about the amount that you earn as a household, but that is a really good fit for a lot of first-time buyers. Then you've got your high earners. So for people that are earning over 75k, there are some options. For people that are earning over 100k, there are even more options where you can get up to six times. And again, with certain industries and professions. So if you are a professional, so you're an accountant, a vet, a doctor, a nurse, etc., you will quite often also be able to get additional borrowing based on your income and based on the fact that the lender is going to look at you and think it's very unlikely that you'll be out of work. You're kind of a qualified professional. So we would always look at those sort of things to see if there's a potential that we could use those. Obviously, you've got shared ownership. You have the government shared ownership scheme, and then you also have a number of private shared ownership schemes. The private shared ownership schemes work in a very similar way, but they remove some of the requirements of the government shared ownership scheme. So very simply, you buy a share of the property that you can afford and you rent the rest. Some of the private schemes would mean that it doesn't have to be a new build property, or that you don't have income caps. Shared ownership can be a great scheme, and has become increasingly popular since Help to Buy vanished. And then the other way that we'll look at things will be, is there anybody else that can support you? And kind of what I mentioned earlier when I said, when we started out on our journey at Tembo, we were primarily seeing first-time buyers struggling with affordability. Now we see a much more diverse group of people that are struggling. And these products are very popular for people all the way through from first-time buyers, people taking their first remortgage who are in a similar position to you. They might have bought with a 95% deal a couple of years ago on a crazy low interest rate. And now it might not be tenable for them as a pair. Their circumstances might have changed, etc. All the way through to people that are going through breakups, kind of big life circumstance changes and need to stay in a property. These solutions require somebody to come in and help you, which typically will be a parent. It's not always. We see siblings helping, we see grandparents helping, but most of the time it's a parent. And one thing that I always like to labour the point on a little bit is there is a lot of negative press around the bank of mum and dad, and I can understand why, because there's a feeling that, yes, it's great for you, Gerald, that your parents can gift you 120 grand and you can go and buy a property, but that is not the story for everybody, because most people don't have that kind of asset available to them. And that's completely fair enough. There is always going to be an element with the bank of mum and dad to which it's not necessarily available to everyone. But there have been a huge number of advancements really in the way that family can support. And in my opinion, it democratizes access, I would say. So you might think back in the day, it meant that you had to have this big chunk of cash that somebody could just gift to you. Now, someone can help using their property, their income, their savings, their pension. So we know that, my parents got on the property ladder when my mum was a student nurse and my dad had just started an apprenticeship in marketing. So they would not have been earning the big bucks back then and they were able to buy. We know that back in the day, property used to be an equalizer. It was a way to kind of step up. and it was really much more accessible than it is now. So you've got this huge demographic of people. I think it's over 55s own over 75% of property wealth in the UK. So you've got this audience of people who are sitting on this massive, massive amount of equity. And if you can unlock some of that and pass it down to a younger generation, that is actually a massive opportunity to help a more diverse group of people buy sooner. So it can't help everyone, but it can help a much broader mix of people than it could when it was just gifting cash or putting your property up as security.
I think, yeah, I mean, it's interesting because this all comes against a kind of backdrop of I mean, the property market is difficult to get onto because we don't build enough property, right? And there are limitations around that. But I think it's just listening to you there, it's very interesting to see all of the kind of solutions that are and the adaptations to the market that are done in order to help that kind of solve that affordability puzzle. That doesn't mean building loads and loads of houses, which for things we won't get into is politically difficult and practically difficult in lots of different ways.
Yeah. We did
Sorry, go on.
I was just going to say, we a couple of weeks ago we did a poll on LinkedIn that was asking people about what they thought would be kind of the biggest game changer in the housing market with a new government, whoever that is. And I think the options that we put out were building more homes, which is one of those things that everybody sets these crazy, crazy targets at the beginning of an election campaign, and we have yet to see that materialize. But building more homes obviously would be a huge one. The second one was changes to lifetime ISA eligibility, which is a tool that people can use to get on the property ladder, save a deposit faster. Stability was another one. And then the last one was intergenerational wealth transfer. And unsurprisingly, building homes won out. But I think intergenerational wealth transfer and making that easier came in either at number 2 or number 3. So it does have the potential to create massive change really in the market without such a labor intensive, slow process attached to it, like with building homes. So yeah, I think there's opportunity there. It would be interesting to see how a new government try to make that happen.
So speaking of one of those options, though, this was the kind of the last thing I wanted to talk to you a little bit about. I mean, and I have a bit of experience here in that I used one, and my partner actually, we both use them together. That's the lifetime ISA, which we actually used, and we, I mean, we thought we don't live in London, so we didn't have any of the kind of the issues that you have with the first time property valuation, that kind of thing. And it helped us get on the ladder quite quickly because the bonus is very, it's very generous.
Yeah.
It's obviously it's a bit of a maligned product. Like there's kind of always this thing about it. It was always a bit of a halfway house. There was lots of stuff unfinished about it. It's imperfect, but obviously you guys, I don't know how recently, but you've signed up for it, so you clearly you must think it's a it's a good thing. What are your thoughts on the lifetime ISA as a tool?
I think in general, my feeling is that the lifetime ISA is horribly underused and hasn't really been promoted particularly well. I would say, like, awareness of it as a solution, I think, is really low. 1 in 6 first-time buyers used a lifetime ISA last year, and when we looked at our data to see how many people were buying above the 450k cap, it's tiny. It's like 3 or 4% of our first-time buyers last year bought above that amount. I think it is a brilliant product. It is especially brilliant if people start using it young. If you're able to open a lifetime ISA when you're 18, you don't have to be putting loads of cash into it every year, but you just have it open. Maybe, I mean, we have gift links. I think other providers might have something similar. You get your birthday presents put into that account. It's really nice for family because it means that their 50 quid, they know it's going to be going to your first time home deposit instead of going on a round at the pub. And actually, it just means that over time, you've got the ability to build up and collect those 25% bonuses. The one number that always blows my mind is if you were to save from age 18 to the max age, which is 50, you would get £33,000 in government bonuses. So that is massive. Obviously, you'd hope that you'd buy before you're age 50, but maybe you'd keep saving into it for retirement. There are very few products that would give you a return like that. There are very few opportunities in life where the government give you money for free. So I think it is an amazing product. I would really like to see some changes to the kind of eligibility and the rules. So the thing that really puts people off is firstly the price cap, which I can understand for many reasons. I think 450k is a massive amount, and most people don't buy their first home for anything even near that. But if you're a very young person, if you're 19 and you don't think you're going to be buying until you're in your 30s, how could you have any idea what's going to happen in the property market in that amount of time? And really, all that we need is for the cap to readjust based on property price growth, which I think has been about 30% since it launched, and it's never changed. So I think that really puts people off. And then the other thing that puts people off is the whole penalty function and the way that works. So in LISA world, you have eligible withdrawals and ineligible withdrawals. An eligible withdrawal is for your first property or for retirement. And within the first home context, it has to be under 450,000. There are a number of other kind of rules and regulations around it. And an ineligible withdrawal is anything else. So if you just suddenly need to get your money out, or you think, I don't know, I'm going to stop trying to save for a home, and actually cost of living crisis, I just need this money, you would get hit with a 25% penalty, and that would be of the full balance. So what that means is it's the full government bonus and about 6% of your own money, which I just think feels unnecessarily harsh. Like, why could the government not just take the bonus back? Why do they need to take that 6% of the savers' money? Because when we speak to our customers who need to withdraw funds ineligibly, it's usually because of cost of living crisis, emergency in their lives. Like, they need access to that money, and that can happen. Life comes at you quick sometimes. So I think just changing it so it's only the penalty is only the bonus would be fair, and then lifting the cap. I think those would psychologically have a really big difference on people wanting to go with it and just bet and put their money in there, because it is a brilliant product but very underused.
The penalty is such a tricky one, isn't it? Especially because because you can get lifetime ISAs in cash version, which will obviously pay you a fixed rate of interest, or a variable rate of interest. But if you have a stocks and shares one and you're getting the bonus and then you're earning growth on that bonus, it becomes a bit of a grey area, doesn't it? It's like, well, am I being penalised for that growth, or am I still getting away with it? Because I guess you'd have to figure that out. But I mean, the thing I always liked about the lifetime ISA was actually, and this is compared to kind of a regular ISA, is that actually the lifetime ISA does what the ISA used to be, which is sets a relatively low but eminently attainable goal each year. So a regular ISA is 20 grand a year now, which for most people never fill, and the vast majority of people don't fill it. But 4 grand annual limit, if you're saving hard and you're on an average income, you push a bit and you want to say you can do it, and it's quite a nice target, I think. But
it's 330 quid a month. Like, that's for many people who are grafting away, saving a deposit, that would be quite a typical amount to be able to put away. So I completely agree. It feels within reach, instead of saying, oh, you've got 20k this year, how are you going to bring that in? You think, if I work out my salary and my take home
well, you're
pay,
talking like fire movement stuff here. It's like, no, I'm going to put 80% of my income in savings. It's like, people are mad when they do that, but yeah, you do get. We had someone who writes for us occasionally about fire. Anyway, yeah. This is really interesting. I feel like we could keep talking and talking, but Polly, you've answered some really interesting questions there, and so thank you very much for joining me.
You're very welcome. Thank you for having me. Looking forward to more.
Pleasure. Yeah, I know. Everybody listening, Mortgage Week by the time this podcast is up, should be in full flow. We are publishing on the day of the general election, but hopefully something for people to read when they don't want to read about the politics anymore, perhaps. That's it. You can catch us on Spotify, YouTube now, and Apple Podcasts. And of course, you can catch up on everything on the Mouthy Money website, social media channels, and sign up to our newsletter for regular updates. So, Polly, thank you again. And thank you to listeners, and goodbye.